As far as frustrations, we are dealing with the corporate tax code and we're dealing with qualified accounts. So we don't have a lot of flexibility there.
What's the biggest frustration that you've seen for your clients, yourself, when it comes to capital gains tax deferral options and or the 1031 exchange?
Let's touch on the frustration. I'll definitely answer your question. That also cues me for maybe we can also do the flip, which is one of the best strategies that I've seen in ROBS, which is actually rather well known. I would hope we could have a few minutes to talk about that.
Sure.
As far as frustrations, we are dealing with the corporate tax code and we're dealing with qualified accounts. So we don't have a lot of flexibility there. When a client of ours that's using their 401k, IRA, or whatever qualified funds to invest in their company, plan say owns 90% of the stock, they then build that business up and say it gets 10 times the original investment. So they invest $100,000, that plan stock is now worth $1 million. They sell their $1 million company and they are putting that increase, that $900,000 back into the plan. When that happens, the plan does not pay any taxes on that gain. Just like any 401k plan investment, that is growing tax deferred for the individual until they take a distribution from the plan. Now, down the road, when they take that distribution, they are going to pay ordinary income tax on that $900,000. And some people do not like that reality. And they would find that as a frustration. Why am I paying ordinary income tax on $900,000 that was a capital gain? It's because the shareholder owned the 401k plan as the shareholder owned that stock, and that's how 401k plans work. Now, on the flip side, well, before I get to the flip side, a lot of our clients don't make that kind of return. They might be paying themselves out income over time. Their stock really isn't growing. They start a restaurant or whatever, and maybe it sells for a little bit more. They make some kind of gain on it, but that's not their big concern. The people who we have as clients who know going forward that their idea is going to make a lot of money for their plan as a shareholder for their own retirement, rather than having those funds in a pre-tax status for the investment into the corporation, they will do a Roth conversion inside the plan or transfer Roth 401k money into the plan. We cannot transfer Roth IRA. We can do a Roth component of another plan or pre-tax money and convert it to a Roth. They then buy the stock in a Roth status, then they grow 10, 20, 30 times their company. And all of that is now pulled out tax-free for themselves down the road. And that is a strategy I've seen work several times for people.
Excellent. And by the way, you can learn more about Frank at 401krobspros.com. Okay.